Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is pretty much pause day today. As you can see on the S&P, we're pretty much flat, 0.06% negative. Nasdaq is also flat there. Semiconductor is down though, about 1.4%. Dow down a little bit. Small caps down a little bit. Banks down a little bit. They're all down a little bit. Energy's down a little bit, like 0.6%, 0.3%. Transport down a little bit. Biotech a little bit. Emerging market is up a little bit, about 0.5% there. Let's see. Grayscale Bitcoin is down. It's been rising for about a week or so. Looks like slowing down a little bit today. Gold and silver made a little bit of move, about 1% there. Oil's up about 1%. We got dollar down. Treasury bond is up about 0.7. And VIX is up about 1% there. Pretty much of a pause day, sideways, lethargic type of day today. Not a whole lot. But it's interesting because even though the market, these indices and sectors were, pretty much, flat today, I've noticed a lot of my stocks that I'm holding, a lot of them were up quite a bit. And so, when you're in a bull market, even though the indices itself might be, slightly red, slightly green, kind of flat, you'll find some of the stocks making a move. You can see right here, MasterCard's up about 0.3%. Disney's up about 0.6%. Coca-Cola is up about 0.7%. I noticed the Baidu and some other stocks that I'm holding were up quite a bit today. And so, sometimes the indices could grind, but there will be certain stocks that will kind of use that bullish environment to make a run, especially the lagging ones, right? The lagging ones. You can see that Dick's Sporting Goods is up about 2%. Theirs coming up. But let's stick with the S&P 500 ETF 65-minute chart. You're looking at right here. And so this is where the market closed yesterday, right here. This is where it closed. We had a little bit of some sort of flagging pattern there. Looks like that micro term support kind of held. We ended up gapping down a little bit right here, and then slightly down, and then quickly that dip was bought. We continued higher and kind of clearing this level, that micro pivot there, held it for a couple hours or so. Third hour we lost it, and then we've been just kind of grinding lower. So we're just kind of hanging around, pretty much sideways, right? Just pretty much sideways in the last 2 days. So we can't really tell much looking at this last 2 days price action. We'll get a better idea, right? If we kind of zoom out here. Let's see. You can see as we zoom out, you can definitely see a bigger picture, right? It's always good to see that higher high, especially if you're a long-term investor in this market. You want this market to continue to cultivate and establish that higher high, as we want to continue to give benefit of the doubt to the buyers in an overall sentiment of this market. So it looks like we're kind of stalling here. We made a big move here. It was at 380s, went up to almost 4, 6, or 7. V-shaped higher. We saw that kind of a gap up on Monday, and then we had a bullish day yesterday all throughout the day. And so, maybe we are getting into that overbought territory. And according to my oscillator, we were overbought yesterday, extreme overbought. In the long run, longer term, the overbought signal is always a good thing, like especially extremely overbought. I mean, in the short term, the micro term, the price would need to kind of pull back, reset that oscillator. But, let's So we see that gap. We talked about this exact same level, 400. With that grind higher, you can see my short-term moving average now past that 400. We're now, my short-term moving average is residing at 402. You can see right here, 402.71. A lot of people are asking me about my moving average setup. So here you have it. We got the short-term 25 exponential moving average setting at close. Oops. Let's bring that back. And so that's a short term, right? This is a short term there. And we got the midterm, which is exponential 285 setting at low. That's the midterm. That's the blue dotted, line. And we got the long term, which is the exponential 480 source at close, setting at close. That's a pink line there. So if that's kind of what you're wondering here, so that's, you can see that as a midterm, right? It's been acting as a support. And it's a long term, midterm, short term, right? Long term, midterm, short term. As the market has been respecting these for quite some time, especially the short term moving average has been acting as support. As you can see, we haven't seen the short term moving average get retested ever since this was at this level here, right? Back in March 30th. And that makes sense. Maybe, bulls want to come down, or not the bulls, the price want to come down and retest that short-term moving average coinciding with that gap area. Let's go to that oscillator right away. Maybe get a little bit of better idea. So looking at that oscillator, you can see it is curling back down after hitting that extremely overbought. And people think, oh, it's extremely overbought, therefore it must be, bearish. It must be very bearish. It's not always that's not always the case. You know what I mean? It's actually more bearish, as you can see here. Let me just remove this real quick. I'll expand it to you. You can see, right here? You see how the oscillator does not go all the way to the top of its band. Do you see this space right here? Right? You see that? Do you see right there? You see it in that period of time where that oscillator did not go all the way to the top of its band. It just kind of stopped short, and just look how the market was doing. See, when that happens, you see how the market gets into these lower highs and lower lows in a short-term downtrend, right? Do you see that? How we do not actually see strength in price. So that's kind of the first sign you notice when the oscillator is not getting all the way back up. But you realize, right, when the oscillator do get all the way up here, some of these levels, though there's a pullbacks, but there is that uptrend continuing with those higher lows and higher highs. So you can see it's been a while since this thing, we talked about this yesterday, it's been kind of, the oscillator's been not able to hit that extreme overbought level for about 2 months. You can see that last time right here is December, early December, or February. And this is the first time in April hitting that extreme overbought. And that's a good sign. That's a good sign that the, the market is ready to, have that stronger rallies. And you can see even here when this thing never got on the top of its band, right? You can see right, that's the high level, like extremely overbought level. You see right there, this is a key right here, and that was that kind of the bearish divergence we had, but it never hit that extreme overbought level. Guess where that was? This was right here, and we saw another decline, right? So you can see in just last 2 months or so, we saw this turbulence in the market when the oscillator is not able to hit the top of its band all the way to the top, right? All the way to the top. You can see this subtle information is giving us that, bulls are kind of weak. I mean, they're bringing it up, but they're just not able to push it all the way up. But ladies and gentlemen, we did push all the way up. Not only we pushed it all the way up, we really pushed it. So you can see, if I see a previous high, you can see that was the previous high, and you can see we made record high by poking above it. So it's been the first time since October, November, December, January, for about February, for about 8 months. This is the first time we pushed it all the way up. So what does that mean? That means in the short to micro term, the oscillator do need to reset. It does need to reset in some ways, right? So only concern right now is how the market is going to behave while the oscillator resets, right? So that basically what the oscillator is telling us is that there's a strength, right, in this move, more strength than before. It's just that they're tired in the short to micro term. They're tired, but they want to run again at some point. So as the oscillator resets, we want to see the price to maybe correct through time, while price makes sideways move, right? Instead of actually literally correcting through price, because price can correct through time or price can correct through price, right? Because the oscillator do need to come back down. It may not need to come all the way back down to the bottom of its band. We may even do something like this. In the short term and the micro term, we are overbought, we're falling back. So the market might be just kind of waiting. So market needs to kind of rest after this kind of run and digest its gains in the next, I don't know how many days, maybe days or so, a couple of days or so. So we might have some lethargic days or so, maybe a little pullback, maybe a little higher move, grindy move, sideways move, maybe a little shenanigans here and there. But again, I think that, like I said yesterday, 400 ish, that 403 level is going to be the important level of support. And I'm going to mention this level again. There's that pivot there, and that's going to be another kind of extra layer of support. My short-term moving average is residing 402 right now, so that's where everything is colliding in this vicinity. Rising pips, potential rising pivot. We got the short-term, the gap area, 403, 400. So that's the level to watch here. So I think we buyers are waiting for this oscillator kind of reset. And so with that, we're gonna have to kind of deal with some of the lethargic, sideways, choppy type of move. But as long as we hold 400 above 400, we want to continue to give benefit of the doubt to the buyers in the short term. Let's see how the market plays out. I'll come back for you. Enjoy your evening and good luck trading tomorrow.